Have you ever wondered what money really is? It's gone from shells and stones to gold coins, and now, to numbers on a screen. But what if we could create a new kind of money? One that's purely digital, not controlled by any bank or government. This isn't a sci-fi plot, it's the story of cryptocurrency. Our journey begins long before Bitcoin. In the 1980s and 90s, a group of programmers and activists called the cypherpunks dreamed of creating a private, untraceable digital cash. They made attempts like DigiCash and BitGold, but they all faced a major hurdle: the double spending problem. How do you stop someone from spending the same digital coin twice? It seemed impossible without a central authority, like a bank, to keep track of everything. Then, in 2008, everything changed. A paper titled Bitcoin, a peer-to-peer electronic cash system, appeared online, published under the pseudonym Satoshi Nakamoto. To this day, no one knows who Satoshi is. It could be a person, a group, anyone. This paper solved the double spending problem in a revolutionary way. In January 2009, the Bitcoin network went live. Satoshi Nakamoto mined the first block of transactions, known as the Genesis block, and a new era of finance was born. So, how did Satoshi do it? The secret ingredient is a technology called the blockchain. Imagine a digital ledger, like a giant, public notebook that everyone can see but no one can alter. This notebook is made up of a chain of blocks. Each block contains a list of recent transactions. To add a new block to the chain, powerful computers, called miners, compete to solve a complex mathematical puzzle. The first miner to solve the puzzle gets to add the next block to the chain and is rewarded with newly created Bitcoin. This process is called mining, because the puzzle is so hard to solve. It's practically impossible for anyone to go back and change a previous block without being noticed. This makes the entire ledger incredibly secure and transparent. It's a system built on math and code, not on trust in a single institution. For the first few years, Bitcoin was a niche interest for tech enthusiasts and cypherpunks. You might have heard the famous story from 2010, when a programmer paid 10,000 Bitcoins for 2 pizzas. At the time, that was about $41. Today, those 10,000 Bitcoins would be worth hundreds of millions of dollars. Talk about an expensive pizza. As Bitcoin gained traction, people realized its underlying blockchain technology could be used for more than just digital cash. This insight led to the birth of altcoins, or alternative crypto. In 2015, a young programmer named Vitalik Buterin launched Ethereum. Ethereum took the blockchain concept to the next level. If Bitcoin is like a digital calculator designed for one-purpose transactions, then Ethereum is like a global smartphone. It introduced smart contracts, which are self-executing contracts with the agreement written directly into code. Think of it like a digital vending machine. You put in the required crypto, and the smart contract automatically delivers the product or service. No middleman needed. This innovation opened the door for a universe of decentralized applications, or dApps. While Ethereum was building a new kind of internet, other cryptocurrencies emerged to tackle different problems. Ripple, or XRP, was created to help banks and financial institutions transfer money across borders faster and cheaper. Unlike Bitcoin, it doesn't rely on mining, making its transactions incredibly quick. And then there are the FHC, less serious contenders. In 2013, 2 programmers created Dogecoin as a joke. Based on the popular Doge meme featuring a Shiba Inu dog, they never expected it to take off, but a passionate online community rallied behind it. Dogecoin proved that a cryptocurrency's value could be driven by culture and community as much as by its technology. Much wow, very crypto. The year 2017 marked a turning point. A massive speculative frenzy particularized the world. After the dust settled, the innovation didn't stop. The technology continued to mature, leading to 2 of the biggest trends in recent years: DeFi and NFTs. DeFi, or decentralized finance, aims to rebuild the entire traditional financial system to lending, borrowing, insurance, trading on the blockchain. Without banks, using DeFi platforms, you can lend out your crypto to earn interest or take out a loan, all governed by smart contracts instead of a bank manager. It's a bold vision for a more open and accessible financial world. Around the same time, NFTs, or non-fungible tokens, exploded into the mainstream. An NFT is a unique digital token on a blockchain that represents ownership of an item, usually a piece of digital art, a collectible, or even a tweet. Unlike a Bitcoin, which is fungible, meaning one Bitcoin is interchangeable with another, each NFT is one of a kind. This created a brand new market for digital creators and collectors, with some NFTs selling for millions of dollars. From a cypherpunk dream to a multi-trillion-dollar global market, the history of cryptocurrency has been a wild ride of innovation, speculation, and disruption. It's a story about challenging the status quo and imagining new ways to organize our world. We've seen booms and busts, revolutionary ideas, and meme-fueled manias. What's next for crypto? Will it replace traditional finance? Will the metaverse be built on blockchains? No one knows for sure. But one thing is certain, the conversation started by Satoshi Nakamoto is far from over. This digital revolution is still in its early days, and the most exciting chapters may still be unwritten. Thanks so much for watching. If you found this journey through crypto history fascinating, please give this video a thumbs up and hit that subscribe button for more deep dives into the world of technology. Let me know in the comments what you think the future of crypto holds. See you in the next one.